Hi, it's Peter Temple for Monday, May the 2nd, 2016. This is the market report. And this is going to be a little different report because I'm going to go through some very basic Elliott wave rules that I just see mistakes in over and over and over again. And I think that if you got just one or two little things correct, that you would become a much better trader. And so this is what I keep looking at each time I look at a chart. So I'm going to start. We're going to stay pretty well on the S&P this time, S&P 500. This is a 2-hour chart because, quite frankly, not much has happened in the last week. What you're looking at here is what I consider a great big second wave, sort of a two-pronged second wave. I got my big yellow 2 here at the top. And this goes back to what I had incorrectly, but the only bad call I've made, thought is maybe a truncation here, and that sort of got me off on a tangent. We truncate in Elliott wave this amount, here's on the screen here, this amount of the time. And that's just a guess, but there probably needs more zeros than that. It just never happens. I've never seen one. And so just kind of get truncation out of your mind because, hey, it could happen, but it is certainly not likely. And Elliott wave is all about probabilities. So what we had here is a topping, and we ended up with an ABC corrective wave down. And it's interesting that the S&P came down to a new low here. But I look at a lot of different charts, and what sealed it for me was if you go look at the Dow chart, we look at the same example here on the Dow, and you can see that this came down in 3 waves down here, but it didn't come down to a new low here on this wave. So this makes this wave up an ABC. So we have a corrective wave up, and there's no question about that. Within this C wave, you'll have 5 waves, and we have a 1, 2, 3, 4, 5, and so that's what we're looking at there. But let's get back to the S&P and what I was looking at. Here's the S&P, and I want to concentrate on this wave going up. Now, this wave is in 3 waves, and the reason for that is that the first wave up here is obviously in 3 waves. I'm going to go in, this is a 2-hour chart, I'm going to go into the hourly, and you can see that when we zoom in, you can see that this wave starting at the bottom is a 1, 2, 3. And there's no question about that. There's no second wave here. It just doesn't exist. So for this to be a 5, you'd have to have a very prominent wave, and it would have to come down here and retrace 62% and go up. That's a basic Elliott wave rule. So if you have a motive wave, every subwave has to be in 5 waves, and they too have to be motive, and they have to follow all the rules. So when we look at these things, I look at this, and I have people sometimes sending me these marked up as 5 waves, and I go, well, that's wrong. It's just not 5 waves. This wave will never change now that it has traced out, so you can't expect 3 waves to eventually become 5. It just is not going to happen. So I knew from the start there that we were looking at a corrective wave up. So, and the interesting thing is, if you measure this A wave with your Fibonacci tool and make it 1 length of the Fibonacci tool, you can go up here and measure the C wave, and at 1.618, guess what? It comes up to this level here, which is our previous high, which is, I'm going to say, 2116, because that's what our high was over here. So this is projecting, and that's a very typical end wave, a full-length wave for a C wave off an A wave. It typically goes to 1.618, the length of the A wave. So this has been my target for some time, and you can see that there are 5 waves within this C wave. And in actual fact, on Friday, we started to come down here, and so we've got this ABC 3 waves down at the top end, and this is turning into a 4th wave, and it actually might come down to this 4th wave here. So it's a little early to know that. We'll certainly know on Monday, because if it's going to do that, then we will have a clear 5th wave up to this top. But this is also, because this is becoming very large, you're going to be able to look at this wave and say, well, this is also an A, B, C. It comes down to the look of the wave, and if you have a second wave that is the same size as the 4th, then you can look at this and say, well, there's 5 waves there. But we're going to have this large one, so we'll see what happens. A little early to know there. Let's jump in to the most recent area here, and I want to talk about what happened the last couple of days. Here we are zoomed in right to the top of this wave. This is a 15-minute chart, and you can see here's my 2116 level here. That's my target for this second wave. And if we top here, this would be a fifth wave of the C wave, and you'd have a C here and a number 2 up here just to denote that this was the end of the second. But we had an interesting, I want to concentrate more on this area here, and right now I have actually got this labeled as a triangle at the end, and very well could be either to this point here, but that looks like a triangle. Now that's not to say that this wave cannot drop down here and become a fourth wave, as I'd mentioned in the last slide. But right now it's looking like it's a triangle. But I want to concentrate on this wave here. We had a third wave up, and this does not have a fifth wave yet. So we're still waiting for a fifth wave. We had a 1, 2, and then we've got 5 waves. You could count 5 waves within here because we've got this little wave. And then we topped here and came down. Now this is the important wave. When this came down, it came down in 3 waves. So you can see that there's an A wave here, 1, 2, 3 down. It came down really quite low here, 4, 5. So there's 5 waves here, and then you have another little 3 up here and another wave down. So you've got an A, B, C. That's 3 waves. And so if you get used to this and you understand that an Elliott wave, this is one of the basic things, 3 waves is a corrective wave, and it will eventually retrace. So it tells me eventually we're going back up to the top. So it will never change. This is like the wave that I showed you, the much larger one. Once you've got 3 waves, this wave, no matter where it goes, will always be in 3 waves. It will never be a motive wave because, again, in a motive wave, all of the subwaves that are the single digit ones, or sorry, the odd numbers, 1, 3, and 5, have to have subwaves with 5 waves, and they have to follow the Elliott wave motive wave rules. So we've got a 3 wave here, we've got 3 going up, and we have 3 coming down. So we also have look at this from the big picture, and we have an A, B, C. This wave is going to retrace, and it's going to go up to the top. So when you tell me that this looks scary, actually it doesn't look very scary, and it hasn't come down very far, because if we go down here to 2000, 2000 is the 38% level. In other words, from the very bottom of the wave, which was February the 11th, which I showed you before, this wave can come down to 38% and still be a fourth wave. So we really haven't come down very far at all. And so I looked at this on Friday and went, well, okay, this is probably just a fourth wave. I'm not sure where it's going to come down to because we go up a little wider. I actually have a fourth here. This is the previous fourth. It could just drop down to the previous fourth, or it could drop down to 38%, or it could stay as a triangle. And so I have it marked as a triangle right now because it's the most obvious. If it is a triangle, we go up, down, and up in a fifth wave, and we just have to wait and see. But we are not coming down. You will find that following Elliott wave and understanding 3 waves and 5 waves will make you a much better trader and keep you a lot safer. And so let me go back to my mantra to end this off. I always say, and people that have been with me for a long time knows that people that have been with me for a long time know this, that the mantra is trade what you see, not what you think. So if you think it's a top, well, you could be right and you could be wrong. But if you look at the Elliott wave waves and you see that it's a 3, you know that it's not a top, and you should trade what you see, not what you think it is. All kinds of people get into all kinds of trouble when they go and trade what they think. So this is all about accuracy. It is all about being a better trader and being much more profitable and understanding how the markets move. So hang on, I have a very high record in terms of what I have been able to call on these waves. I'm very seldom wrong, and so just hang on. This thing's going to top. I believe it's going up to 2116 because I can't understand where else it would go. That's just what Elliott wave is telling me. So I will. I'm not going to put a lot more charts in here. I'm just going to make this a little lesson on some Elliott wave basics, and hopefully this will help you a little bit understand what's going on. I will update the charts on the blog. And I think that's about all you need for this week. Good trading, pay attention to the waves, watch for 3s and 5s, and it will all come together. Just a little bit more waiting.